welcome to Tanzania Today, a program that aims to project Tanzania's position to the globe economically, socially, politically, and diplomatically. I am your host, Faida Ngaga. Today we're going to discuss about the significance of the financial sector towards national development, but also we're going to discuss about the whole evolution of this sector throughout the years and how much it contributes to the economy. The financial sector supports investments, businesses, but also it brings about financial inclusion. So this is a pivotal topic to discuss. Now, before I introduce my guests today, we're going to hear from our sponsors, our main sponsors, and then when we come back, you'll get to know who I have with me today to discuss this crucial topic.
Now, it's easier than ever to make payments with NMB Lipa Mkononi. Whether you are a Tanzanian or a foreigner, you no longer need to worry about making your purchases. Simply scan the QR code, confirm your card details, and fill in the payment link. Then receive a confirmation notification. For a seamless checkout experience, save your card details securely for future payments with Click to Pay. You can save and use multiple cards to streamline your transactions. Making payments through Lipa kwa QR link is easy and safe. The link is truly Kimasta.
NMB Bank, close to you.
Welcome back. So, as I have alluded earlier, we're going to discuss about the significance of the financial sector towards national development, national economy, but also how it evolved. To discuss this topic with me, I have three guests. To my right is Frederick Shirima, who is Assistant Manager Financial Stability from the Bank of Tanzania. Welcome to the show. But also to my left is John Mero, who is Assistant Manager Monetary Policy from the Bank of Tanzania. And also we have Dr. Bravius Kahioza, Resident Economic Analyst, to our show, Tanzania Today. A warm welcome to all of you to the show.
Thank you so much, Faida.
Thank you. Thank you so much.
So before we discuss the topic that we have in hand, let's draw a picture, the architecture of the financial sector in Tanzania from independence to now. Just briefly, how has it evolved? Give us that brief architecture.
Yeah, thank you, Faida. Maybe I should stress that the financial sector, it's very important to the economy because it acts as a conduit to channel financial funds from investors and the other people in need. And this process of channel fund, it assists in income generation, but also economic growth. And this process has been involved from time to time since we have a centralized and state-owned financial ecosystem where after independence, most of the financial institutions were government-owned and they were controlled by government, including banks, insurance entity, and other financial institutions. But as we move on, the financial system has been involved with increase in number of investors, and now it's become more liberalized, private-owned, but also with a diversified ecosystem. And at the moment, with the development of technology, the financial system has become interconnected compared to the eras which they used to work in isolation. And this interconnection is between financial institutions, financial service providers like mobile money, but also financial regulatory bodies, which collectively they support intermediation, capital mobilization, as well as the needs of the economy in providing transaction, facilitating transaction, but also providing credit to support the growth of the economy. And the Bank of Tanzania has, from time to time, improved the efficiency and the operationalization of the financial sector using leveraging from modern technology to include payment system and settlement infrastructure, supervision of financial institution, financial market, and the modernization of monetary policy. And this has increased the growth and resilience of the financial sector and the role of financial sector in serving the needs of the economy. And actually the growth of financial sector is picking up, and the financial sector is increasingly becoming one of an important sector in the economy, which at the moment it contributes like 44% of the GDP. And this is the rise from 17%, which was there in 2017. But the growth of financial sector has been increased over time as well. I remember in 2023, the growth was 15%, while of recent year, it goes up to 17%. And the overall, the banking sector hold a marginal share of 70% of assets of the bank, of the financial sector, followed by pension, insurance entity, and collective investment scheme, which have also gained momentum in recent year in providing investment platform to the household. So with the modernization, fintech, and the innovation, the financial sector has expanded its reach. The level of financial inclusion has been increasing from time to time to reach rural population and the other people which is underserved. Thank you.
Dr. Kahioza, if you were to speak of the actors in the financial sector, now I want you to analyze this from the beginning, maybe immediately after independence then, and how they have evolved now. How would you say, like the stakeholders, the actors, the banks, investments, and now we have fintechs. So give us that brief picture first.
Thank you again, Aida, for wonderful work you are doing here. And it's also important that today we are joined by good gentlemen from the central bank, and we talk about the financial sector, the money economy, so to speak. I think we are, as I always say, we are speaking to people who are ex cathedra. They own the matter, so it's good that we have them on the show, and that is a very beautiful, it's a beautiful thing. In line with your question, I think he has elaborated very well the journey from independence to date and how things have been turning out. But three important things to me, three issues are important. Number one, I think we have to look at the share, as you said, of the financial sector in terms of the economy. He has talked about roughly in the 40%, 44%, other data are saying 38%. But in 1967, the contribution of the financial sector to the economy was very minimal. It was about 2.7%. Now, in just 60 years, it has jumped to 44%. Of course, when you look at these numbers, it is not about the flow of money. It's about the people behind these services, the financial services. So it is important to say that when you look at these statistics in terms of the growth of the financial sector, it means there is a lot in terms of what is happening among the people. Number one is about market participation. When the financial sector grows, as it has been, people become more participative when it comes to economic activities. And that we have seen. And it has helped, of course. We still have a huge gap between the rural development and urban development, but because of the growth of the financial sector, that gap is shrinking because of the market participation. Number two is about capital formation. Now, let's remember that in 1962, when immediately after independence, the capital formation in the rural areas was in the minors. So we were not even at 0%. And today we are talking about 5% of capital formation, meaning that people, and of course, I'm talking capital formation in a bigger sense of the economic speak. It can be infrastructure, which are helping people to do that, but it's because of the finances that come with that. And therefore, capital formation has been growing courtesy of the growth of the financial sector. But again, you talk about economic growth. One of the biggest areas that I think we are proud of as a nation is that we have kept the pace. And remember, in 2011, Tanzania was dubbed as in the club of 7% growth as a country. And one of the areas that aided that is the financial sector. And when economic growth happens, two things happen mainly. One is that the state or the nation becomes capable of serving the people in terms of their social needs and the rest. But number two is that it is easier for production to expand, and thereby comes another factor, which is productivity, because without the financial sector being at the helm, then you don't see that, and that we have seen. Lastly, is that it has aided the nation to play a role in terms of how do we interact with the rest of the world. One of the most important feature of that is the financial sector. Talk of export and imports, for example. You may talk about other intricacies on how the nation benefits from that, but of course, at the center of it all is that you need to have a financial sector that is attractive to the people coming into the country, but our own people getting also out of the country, because the equilibrium set of of finances comes because you have that architecture within the nation. So that's what I would like to add on what he has said in terms of your question.
Nero.
Yeah, first of all, I wanted to put something clear that have been mentioned about the numbers. It has been spoken, my colleague has spoken that the sector has contributed to 44% of GDP, but the issues that the total assets of the entire financial sector values at 44% is equivalent to 44.2% of GDP. And that is compared to what my doctor has said here, that it was about 2% way back in 1967. So that's what I wanted to put it a bit clear. The other thing I wanted to add is that the sector has contributed too much, has contributed enough into economic growth, because we have seen that this sector provides avenue for investment. I mean, if you, as Dr. alluded here, people have been producing, they have their savings. So having a well-functioning financial sector provides avenue for investment of idle funds, because now people can use their savings, they can channel their savings through bank deposit. Also, they can channel their savings through purchase of shares, treasury bonds, and other form of equities. And in return, these savings are being channeled to other people who are in demand for investment. So you'll find that the sector contributes into productive activities of the economy through credit extension. And over the past five years, we have noticed that the private sector credit growth was around 15%, and that compares to around 7% in the previous 5 years. So you can see that the sector in these 5 years where we are now have contributed much into the productive sector of the economy. The other thing is the sector itself has contributed enough into the GDP, because we have noted that in the past 5 years, we noted that the growth of the sector itself, it was around 1%. But now the sector is growing at around 9% to 10%. And of course, even its contribution to GDP growth was around 1% in the past 5 years. And now we are around 10.4%. That is 2024. So if we look at if we look at these numbers, you can see the impact of the financial sector in our economy.
Let's talk about the indicators that show the financial sector's resilience in Tanzania. What are those indicators?
Yeah, the domestic financial condition in Tanzania has been resilient over time. And you remember the likes of COVID-19 pandemic, but also we have been passed through different global shocks, which has affected the supply chain in trade, but also the issue of exchange rate due to tightening global financial condition, but the increase in climate risk, climate threat, and with innovation, there is also a challenge in cyber threat. And this performance of resilience of domestic financial condition is partly attributed by stability in macroeconomic stance, but also you can see like inflation, exchange rate, and GDP growth has maintained its growth trajectory despite of this shock. But looking at the banking sector, which contribute most in terms of the share of the financial sector, it has also been sound and stable, but also the asset quality of the banking sector has been improving over time. But you can have heard about the profitability in the banking sector has been growing, and you know our banking sector is the second in EAC region in terms of contribution to profitability. Is the most profitable, and this is a good sign to the investor. But in terms of resilience, our capital adequacy, liquidity ratio, and asset quality has been in good shape. For instance, for the past 5 years, despite all those shocks, the capital level of the banks has been from 17 to 20%. This is far above the threshold of 12%. So similar to liquidity ratio, it's about 30%, while the threshold is 20%. While asset quality, acceptable limit is about 5%, but the non-performing, which is measured by non-performing loan, at the moment stood at 3.3%. And you know, during the pandemic, things like non-performing loan was about 9 to 12%. And this demonstrates that the banking sector is also resilient to shock. But another aspect of the financial system, household financial condition, me and you, the financial condition of household has been improving. And this is because of the economy. The economy is performing, uptake of economic activity, which has been providing the employment opportunity, income to the household. But of recent, as previously mentioned by my colleague, household investment in financial assets has been growing. And the likes of collective investment scheme, the participation in treasury bond, but also in the corporate bond market. You have heard about the listing of this green and sustainable bond, Sukuku bond. They are being oversubscribed, and this increased the stock of household assets, which can generate cash flow to the household, but also it can increase the wealth of household in saving daily needs like education, food, rentals, but also they can get some income to reinvest in other assets like real estate and financial assets, like which I mentioned, collective investment scheme and the like. And in the data from the banking sector provision of credit to private sector has indicated that household also has a good share of credit. It's about 38%, but John will confirm that it's about 38%. And this is because household has asset. Household income is growing. So the credit worthiness of the household is also in good shape, but also the debt servicing capacity. And you know what, in our analysis, we also found that households have invested this income from borrowing, but also the return from financial assets in productive ventures like construction, real estate, house construction, plot purchase. So when you purchase a plot, it means that you are increasing your stock of assets, the stock of real assets. So you are diversifying both financial asset and real asset. But also they have been investing in small business because the economy is uptake, the business condition is improving. The infrastructure, the electricity and the other infrastructure, what they are supporting people to invest, to diversify and invest in business. And this in turn also has improved the household cash flow, but also its ability to service debt because they have more income. And that's why the financial institution or lending institution appetite to provide loan to household has been on rise. And in terms of firms, because in the financial system we also talk about non-financial corporation like firms, because they are key players in the supply, in the demand side of the financial services. They have also attained growth in terms of actual growth, the business growth picking up from time to time, and also profitability. And this is in regardless of the shocks which I mentioned, the supply side shocks, the exchange rate shocks, but also the climate-related risk shock. And this is the signal like that there is a confidence, there is investors' confidence in the economy. But when the firms are making profit, it means the financial institution also balance sheet tend to improve. And that's what it means by saying that the financial system is resilient, because the borrower's debt servicing capacity is on rise. On real estate, real estate is also picking up. The prices, rental prices, selling prices of plots, but also the one major important aspect on the occupancy rate, especially on commercial building in the city, cities like Dar es Salaam, Dodoma, Arusha, and Mbeya, the occupancy rate is on rise. And our recent analysis suggests that it's about 80 to 100%. In cities like Arusha, Dodoma, the occupancy rate is 100%. And in Dar es Salaam, it's picking up to above 85%. And this is also indicate that there is a good business condition and environment. And there is also confidence to invest. And you know, real estate is one of the assets which is used as a collateral. If you go to the bank and you want to get a loan and you have your property, you can pledge it as a collateral. So if the value of the property go down, the probability of default increases. But because it's going up, we are very happy that the financial sector balance sheet is improving and the financial condition is in a good stride.
Due to that. I think he has preempted, but shortly, like if you were to describe in like 1-2 minutes, the indicators that show the financial sector in Tanzania is resilient against shocks, what would you say, Dr. Kayuza?
Well, I think he has mentioned a lot of the issues that you'd look at, the criteria that you'd look at. I would like to maybe just pick on the downside of what we have been doing, I think, because they're here. I think one of the areas that we need to be consistent and resilient, to be proactive, is about the prices of assets. Yes, it's a very good thing that they show that the financial sector is doing well, but going by the history and of the shocks you have mentioned, is that most of the times, many economies concentrate on the commodity prices. They forget the asset prices. And these asset prices, when they balloon, of course, in the first inception, that you see that people are doing very well. But actually, if you are to look at the general picture of the economy, how people are spending and what areas are they spending, and then you look at the inequality levels, what you see is that in most of the times, it becomes a bubble in the economy. And that's what some people are calling that you have the economy that is showing, that looks very productive. You look at the assets of the prices. But beneath, you have a lot of people who are not getting wealthier over time. And that's what happened in 2008, before the global shocks. What happened is that people downplayed the price from the asset side, and then they concentrated on the other. And then many governments concentrated on austerity measures. What happened is that these people couldn't spend in other productive areas. What happened was a bubble that we could not stop, and then the financial crisis happened. Now, you may say that is our small economy, you don't anticipate such kind of issues, but I think it is very important because you don't see the correlation between, for example, wealth creation to the society and that thing that is happening. And of course, I don't say that the central bank is not doing enough in terms of that. I think going forward is how we look at the economy. For example, their role is mainly on the single mandate. They look at price stability and they do it very well. But I think the debate today in the world is that central banks should move to what we call the dual mandate. So one side you have to concentrate on stability, price stability, but on the other, the productive side. Now, there's a debate on how we can do that, but I think that's a very good thing to talk about. The other side is about the foreign shocks. So it's another, I think it's a very important criteria. So to what extent does the country absorb shocks or prevent them from happening? I think we have done very well comparatively in terms of that. What we need to do is to keep the notch high in terms of how we deal with what is happening around the globe. Now, one side is specifically from the financial sector, but the other side is from the other economic policies. And that is not the role of the central bank alone, but other players and the way we manage our economy.
Thank you very much, Dr. Kayuza. Now, on that note, let us go for a quick word from our sponsors, a commercial break. When we come back, we'll proceed with our discussion.
Nikuulize swali, unajua kuwa unaweza kufanya malipo na matumizi ya pesa zako kila ulipo? Ndiyo, unaweza na NMB mkononi. Kwa kubonyeza tu, unaweza kumaliza kila unachokitaka mkononi mwako. Lipa bili zako au fanya manunuzi mtandaoni kwa kutumia kadi za kidijitali ndani ya NMB mkononi. Tuma pesa hata kwa walio nje au ndani ya nchi kwa urahisi zaidi. Fanikisha mambo yako chap chap kwa kupata mkopo na mshiko faster. ndani ya NMB mkononi kwa riba nafuu. Maisha yanaenda kasi na NMB tunaenda kasi zaidi kwa usalama, urahisi na haraka zaidi.
NMB Bank, karibu yako.
Welcome back. Now we proceed with our discussion about the contribution of the financial sector to the economic growth of the country. Now, Shirima, let's talk about the financial stability of Tanzania. How would you evaluate it?
Maybe I want to mention one very important point on the financial stability. You know, in the past 2 years, Tanzania was greatly listed by Financial Action Task Force. But following years of comprehensive reform, which includes strengthening our legal and regulatory framework, institution coordination from both Tanzania and Zanzibar mainland, we have also improved our risk-based supervision and implement effective enforcement and asset recovery measures. This milestone is very important for Tanzania in terms of international credibility, but also it enhances investors' confidence, improve access to global financial services, but also strengthen the integrity and the resilience of country financial system. And you know, when FATF come for evaluation, they were a bit surprised the way we could manage to deal with the deficiencies which they have indicated in the past 2 years. According to them, they say in other countries, they could not, most of the countries, they sometimes look for additional year in order to deal with those issues. But for Tanzania, we managed to deal with them, and this is very good in terms of international reputation and investors' confidence.
Let's talk about the digital economy now. This is a very significant aspect that also leads to financial inclusion also in the country. Nero, how would you assess this?
Of course, thank you, Faida. Yeah, we all know that these innovations that have been going on in the financial services provision and financial payment infrastructures have a very significant impact on the way the financial entities provide their services. We have seen that through the innovations, through mobile money operators and other digital platforms, we have seen that a number of banks now are now providing digital credit. They have digital saving platforms, and these have helped them, first of all, in terms of cost reduction, because way back when we were young, you were supposed to go to the banking hall to withdraw your cash. But nowadays, you can just withdraw your cash from your bedroom and make a transaction without stepping out of your house. So that is one. It has reduced the cost that has been used by the banks in ensuring that they distribute cash in the economy. The other issue is that these digital platforms, they give avenue for unbanked population to access these financial services. I think if we recall the FinScope survey, they have indicated that about 89% of the population have access to financial services within a radius of 5 kilometers. And this has been contributed much by the digital innovations. We can see now that we can have even small kind of saving platforms where we have these kind of Mkobas, we have these Mwekeza. Those are the kind of very small and minimal micro saving, but when you aggregate them, they have a very big impact on our financial sector. And this in return, they are being collectively used by the financial sector, channeling them into productive activities. As we speak now, the balance we have in trust accounts. I mean, these are the accounts that keeps the money that are with mobile money operators. Is around 2.5 trillion. So you can imagine this balance is now in the banking sector. Assuming that we didn't have these digital innovations, it means that this currency will be circulating on the ground and maybe will have no impact on the economy. So, and the other issue is that because the financial service providers, they can now widen their customer base, because we can see, for instance, we can invest in our small saving, like in these collective investment schemes. You can have your shares paid through your mobile money. You can use a lot of transactions that are being done through the digital innovations. The other issue is that the digital innovations also have impact on the way the payment system functions. It has had a very big impact on the payment systems, because you know the function of the payment system is to channel funds from one individual or to the other market player. So the fact that we have these digital platforms, it means that we can make transactions within the economy, we can purchase goods, we can pay for various issues, including government obligations. That is in a very simplest way and a very cheap way. So to me, it's a very huge plus, and we welcome more and more innovations in this area so that we can benefit from the technology, because that's how we can use what is going on the ground now. And the other issue is that the digital payment or digital innovations, I mean the payment that have been done through the digital platforms, they have some kind of transparency. So you can monitor the quality of payments that have been made. Also, you can use the data that have been generated from those payments to analyze and see where there are risks, or where the policy action need to be done to maybe to get rid of maybe a certain kind of risk or uncertainties that may be detrimental to our economy.
Mm-hmm. We've spoken about the growth and the contribution. Now let's talk about the challenges. What would you say are the challenges that the financial sector faces here in Tanzania, and probably what could be the solution? Dr. Kahiuza.
I think I'd like to buttress the point I started with in the previous question about how do we become resilient in the world that is so volatile in terms of the financial sector. I think that is very important. It's very important from both the theoretical part of it and the practical part of it. And allow me a minute to say that it is important to subject this question to the global aspect of it, because what we economists have called surplusism, a nation having surplus, has turned to be a one-sided affair. And what happened historically that few years before 1961, when the Bretton Woods collapsed, the chair of the Security Council of the United States, by then was Henry Kissinger, asked the younger professionals from the central bank, then in their country, the Federal Reserve today, that what would happen that now the United States is going to become an empire with no surplus. One young scholar, Paul Volcker, who later became the central bank governor, or the chairman of the Federal Reserve in the 1970s, answered this in a very straight sentence that it doesn't matter whose surplus is that. It is most important to get the question right of who controls that surplus. And the United States must control that surplus. And then from there, you saw the financial markets getting bigger, and then the Wall Street issue came into place. And what has happened is that almost 70% between 1961 to 2007 of the whole of 70% of surplus from all over the planet ended up in the Wall Street. But now where is that surplus coming from? is coming from the processes of the economies in terms of production and the productivity. And therefore, resources from some countries have never stopped being natural resources to economic resources. They haven't transitioned. So you have fewer international companies, fewer international banks, fewer that global architecture of the financial sector getting so rich and extracting from these countries. And what has become a way of diluting that issue is that you run the public debt economy. So the emerging markets now should survive on the public debts. But really, the resources are benefiting the countries, coming back like debts, and then resources being squandered progressively. And that's where the problem is on the financial sector, because it is that financial sector at the global level that depends on natural resources from these poor countries or the emerging markets, which is not bringing return to the poor people, but making the financial sector, the players of the financial sector in the middle, getting a lot of resources. And that's why you have heard, like our president has been vocal. He has given, of course, 4 speeches since he got into power in the international fora, that the global financial architecture must change. Now, what she's communicating, and other leaders are communicating, is that there's a way in which the financial sector globally, which drizzles into these economies, which is not actually helping so much to get people out of that. Now, my conclusion to that point, briefly, that one of the many challenges is how Tanzania will be able to swim through these challenges without looking at the expansion of the financial sector, without looking at the expansion of the financial sector in disregard of the fundamentals of that. And now, that is not the role of the 1 cent of the economy, which is the central bank, for example, or 1 cent of the economy, which is in a country like ours, or the president's. It is how holistically we deal with this problem. Because if you look at the macroeconomic metrics, everything will look rosy. And in finance, of course, we have the rosy picture. But going forward, that's what we have to do. Number 2, I think another challenge is that he has talked about the FinScope and how people are engaging. I think that's a very good thing that more people are getting into the sphere of this financial sector. Now, to what extent will you pluck the malaise of people within the financial sector taking advantage of the poor people? So one, for example, we have these microcredits. And of course, one of the challenges that when it comes to women in the economy, we talk microcredits, which is not a very good thing. We shouldn't be talking about credits like we talk to men. But there is a problem of sharkism in the name of microcredits. People are exploited so much in the economy from the financial sector. That is happening. The impact is immense. People all over this country are taken advantage of. And of course, I give credit to the central bank. I've seen several of the governor talking about this and how the central bank is trying to making sure that everything comes into play in the right way. But I think there's a lot to do, because that's the only way you'll be able to bridge the gap between the poor and the rich. If you make this financial sector more, not more regulated, but having the ways in which it is not, you are not turning credit, microcredits into sharkism. And I think this is another challenge that is facing the sector itself.
Thank you very much, Dr. Kahioza. Let's wind up with the last question. I'm interested to know the role of the Bank of Tanzania in regulating and monitoring the financial sector in order to maintain its stability, of course.
Yeah, thank you. Thank you very much. The Bank of Tanzania mandate to regulate and supervise financial institution has been granted by BOT Act 2006, Bank and Financial Institution Act 2006, but also Microfinance Act, which was issued in 2019. So the Bank of Tanzania, we normally regulate the financial institution, mainly bank and microfinance, by using first international standard. We have things like Basel framework because the financial institutions are not operated in isolation. But for us, we normally issue guidelines, frameworks, but also regulations which to guide the financial institution what they are supposed to do in order to make sure that they control the risk and to ensure there is a sustenance in the financial sector, mindful of the fact that the financial institution, they play a great role to the economy, but also they collect funds from depositors and lend it to the productive entities. Another things we normally do on-site and off-site surveillance. We do daily checks to establish the metrics. If the banks or institution in a right picture of ensure that they comply to the financial soundness indicators like capital adequacy, asset quality, liquidity, exchange rate. They are not exposed too much to exchange rate. Those risks which can lead to bank failure or any other issue. But of recent, we have also making more involvement. We want to make involvement to involve banks, even microfinance. And now we have come with a self-regulatory approach where we normally sign like the MOUs with the Bankers Association and Microfinance Association with a number of code of conduct to require them to adhere to the good practice of the operation in the financial sector. So we want to make sure that they self-regulate themselves. But we also collaborate with other financial regulators. As I mentioned before, the financial system is interconnected. So this regulation and the operation, that they are overlap. So we normally work jointly with the like capital market regulator, insurance regulator, even the government when need arise, to make sure that we regulate the financial sector in such a way that it involves everyone and the needs of the economy are served like that. But one thing which I want to mention is like we are also making sure that we normally do even the research and surveys to establish if there is any potential risk or if there is any things which we need to address, which there is something which is involving in the financial sector. But we hold a meeting with the CEOs to discuss. When we have quarterly meeting with CEOs, sometimes we have meetings with more mobile money regulators, operators, but also we have the forum for regulators and the council which bring together different stakeholders to make sure that we talk and discuss what exactly we need to do and why we think that we need to do it to make sure that we get best the financial sector, which is proper in terms of risk management and to ensure that it's sustained and it's stable.
Thank you.
And to contribute to the growth of the economy.
Thank you very much. On that note now, let's go for a quick commercial break. When we come back, we're going to conclude our show.
Now it's easier than ever to make payments with NMB Lipa Mkononi. Whether you are a Tanzanian or a foreigner, you no longer need to worry about making your purchases. Simply scan the QR code, confirm your card details, and fill in the payment link. Then receive a confirmation notification. For a seamless checkout experience, save your card details securely for future payments with Click to Pay. You can save and use multiple cards to streamline your transactions. Making payments through Lipa kwa QR link is easy and safe. The link is truly Kimasta.
NMB Bank, close to you.
Welcome back to Tanzania Today. I am your host, Faiza Ngaga. We're in the last minutes, concluding minutes of our program, and the question that I'm going to throw to our BOT officers today, the last question is, how now does this financial education reach the people and institutions? And like how because there's also this challenge that most people do not have financial education. Maybe from schools it's not taught enough until maybe you major or something like that. So how does BOT do this? Quick, 1 minute, 1 minute.
Yeah, of course, on financial education, we have programs now where we have been doing in collaboration with the Ministry of Finance. We have these financial education campaigns, and now we have this program of having certified financial educators where they are trained on appropriate way to train people on how on financial matters. We also developed a curriculum on financial education that have been shared with higher education institutions. Yeah, we also have a number of engagements where we engage our stakeholders through these exhibitions, and we also have publications that can be accessed through our website and other form of applications.
Sure.
Yeah, I think as he correctly mentioned, we publish our report in the BOT website. We publish annual financial stability report to inform the public on the financial stability sense, but also financial inclusion, how people are included, inclusivity, and the level of financial education and effort which the BOT is conducting to make sure that there is a financial education. But also we have payment system report, which is available in the website. And actually, in terms of customer complaint, we have digitalized our system of handling customer to make sure that there is a proper market conduct. So if you go to the BOT website, you will find a place which is called SEMA na BOT. So you can talk direct to BOT, submit your complaint, and it will be handled immediately or as soon as possible. Thank you.
Thank you very much. This was a very exhilarating discussion about the significance of the financial sector towards economic growth, but also we have discussed about how the financial sector has evolved over the years. I was your host, Faiza Ngaga. Until next time, goodbye.